Yes, good morning, and thank you everyone for attending this panel. This panel is titled Venture Capital Private Equity Funds, and we will have a distinguished number of investors that will discuss some very relevant topic, and more in particular, we will discuss about current investment landscape, about public markets, the status, and more general exit path. We will obviously dig into the sector of investments. Given the composition of the panel, we'll also have a view of a LP. LP stands for limited partners, and these are investors in fund. We will also have, we'll also try to give to the audience some tips on how to raise money at the very end of the panel. So this is Diana Saraceni speaking, and I will start with a round of introduction. And according to what I see here on the screen, I will start with Emmanuelle, maybe to introduce herself and the institution she represents. Emmanuelle.
Sure. Thanks a lot, Diana. So Emmanuelle Coutanceau, I'm one of the partners at Novo, and Novo is part of Novo Holdings. And I will maybe just say a few words about my structure, because some people are maybe not familiar with the very specific structure we have. So Novo Holdings is actually a world-leading life science investor. Currently, we have about $87 billion under management, and we invest about $1 to $2 billion annually, making us one of the largest VC investors worldwide. However, the structure is a bit different than the usual funds, because we don't have LPs per se, or only LPs actually the Novo Nordisk Foundation, and we manage the wealth of this foundation, meaning that actually we are not a corporate venture fund like many people think. So we do not work for Novo Nordisk. Actually, we own a quite significant ownership in the Novo Nordisk company. And the business model is quite easy. We receive dividends from Novo Nordisk. We invest these dividends across the full healthcare space. And then the profits are distributed to the foundation that can then have some charity donation, R&D support in the academic field in Scandinavia, and many things like this. So zooming back to our investment field. So as I said, we invest across the full spectrum of healthcare, from very early stage seed financing to private equity type investments. And just to mention, Novo is actually the company builder of this organization. So our DNA is really to create ambitious startups. We start very early. However, we have the aim and actually the pockets for supporting the companies until they reach an exit or an IPO. And we remain one of the largest shareholders in general. We work a lot with entrepreneur in residence in order to incubate new ambitious companies. And I think we will come back to the early stage investment strategy part later on. So I will not give more details for now.
Thank you, Emmanuelle. Nanna, do you want to go next?
Thank you, Diana. And thanks for inviting me to this panel. So Nanna Lüneborg, I'm a general partner with Forbion. My background is a PhD in neuroscience, and I worked at Cancer Research UK for a few years as well, and before going back to business school to do an MBA in Cambridge, and I joined a venture firm after that. I've been active in life science VC in Europe since 2008, with now 3 different firms. So Apposite Capital in London, 10 years with Novo Holdings in Copenhagen, working alongside Emmanuelle, and I joined Forbion in 2021. So Forbion is a leading European venture firm. We have around 2 billion under management, and we're investing out of 3 different fund strategies. So early stage academic spin-outs through our joint venture with Biogeneration Ventures, venture company creation and investing from preclinical to proof of concept through our venture strategy, where we're currently investing out of fund number 5, and that's a 460 million euro fund. And then growth investing, where we look at later stage private deals, as well as crossovers and public opportunities. And this is a 360 million euro dedicated fund to the growth strategy, where I'm one of the general partners in this team. Great to be here today.
Thank you, Nanna. Sandra, do you want to go next?
Of course. Thanks a lot, Diana. Hi, everyone. Very glad to be here participating in this panel today. My name is Sandra Ferri. I'm heading the life science investment activities at the European Investment Fund. I've been with EIF for now more than 12 years in working in the venture capital team from the outset. Maybe a few words about the EIF for those who are not familiar with it. So we're part of the European Investment Bank Group. And the EIF is the EU body which is focused on enhancing financing for SMEs in Europe. To do that, we do not invest directly into companies, but we invest through intermediaries, meaning either technology transfer funds, venture capital funds, but also lower mid-market / private equity funds. We have started investing in the life science VC funds in the late 90s. With an annual allocation of circa 250 million euros. And we help both the established and blue chip investors in Europe, as well as first-time teams and emerging teams. Our investment activity in this space have significantly ramped up in the last 2 years, as we've seen the market demands and the market needs growing. And as this sector, the life science sectors, has been recognized as more and more strategic for the European Union in general. In 2020, we've committed 350 million into life sciences funds. And we've reached last year in 2021 a record by investing almost €1 billion into some 45 life sciences funds in Europe.
Impressive numbers. Thank you, Sandra. Tim, do you want to go next?
Morning, everybody. I'm Tim Haines. I'm a managing partner at Abingworth. I crossed over to the dark side of Abingworth about 16 years ago, having spent all the rest of my career in operating roles in healthcare. As I'm sure many of you know, we've been around for a number of years. Offices London, East and West Coast of the US are in all the key biotech hubs. We are pretty broad in what we do, focused primarily on platforms and products, but we do invest from early stage. We have a pot called development stage, which can be public companies as well. And we have a strategy called clinical co-development. We're investing out of 2 funds that we raised last year, in aggregate just over $1 billion. I just want to say it's a delight to be on a panel where there's more females than this single male. So signs of progress. Thank you.
Thank you for your closing note, Tim. Much appreciated. Funds under management in a total of 250 million, with 160 million being the last fund just raised, fully to be fully invested at the moment. We invest primarily all over Europe, with focus on Italy, where we are based. In particular, I think we are among the various panelists the most exposed to a subsector of life science, being medtech and diagnostic, but we now also invest in therapeutics. Any stage from seed to pre-IPO, and any round size from 500,000 to 20, where we would place tickets of 6 to 7 million in those bigger rounds. About myself, I have over 20 years of venture capital experience. Before co-founding Panakès, I co-founded another investment company called 360 Capital. I invested in several different sectors, and in the last 10 years only in medical technologies. As a background, I'm an engineer with MBA and investment banker. Good. So thank you everyone for joining this panel, and Sachs for organizing it. I think there's a key question we have to start from, given the difficult times we are living, and we all feel the impact of those on various aspects of our life. There certainly is one clear impact on public markets, probably not only related to the very last days we have been living, because we have seen some signs of decline even before those very last days. Public market conditions are difficult at the moment. Is that somehow impacting our portfolio, our investment activity, our deal-making activity? That's the question. And I will start with Nanna, if you want to take this question, Nanna.
Thanks, Diana. Yeah, I'm happy to comment. I mean, clearly it's a period of a huge amount of volatility, and I guess the performance really has gone kind of from bad to worse over the last quarter. And I think if we're looking back over the last 2 years, I mean, I think there are very, very few winners in terms of the most recent cohorts of recently IPO'd companies in terms of their share price development. That's for certain. But on the other hand, I think if we think about it more as an industry, I think there are still a lot of winners if we think about this as being reasonably well capitalized companies. I think in the past, a standard biotech IPO sort of size of proceeds would be in the 75-80 million range, and that has now gone up to 100 to 150 million range, being quite standard. So I think it puts a lot of these companies in a position to ride out the storm and to de-risk their pipelines to get to pretty meaningful clinical inflection points, even if they have to just try and not look at their share price every day. In terms of what it means for us as an investor, I mean, I think clearly no investor would want to push their portfolio company out into the public markets today unless they really had to. So I think, for us, what we're thinking about with our sort of crossover and later stage strategy is really that we want any company we're investing in today to be well capitalized at least 2 years into the future, and make sure that they have sufficient runway to reach those next clinical milestones and without having another immediate financing risk on the horizon.
Thank you, Nanna. And team, more particularly on the IPO window and or the SPAC/IPO window. What do you think? Is it still a potential exit for us, or do we see this as a lack of competitors finally in our investment activity?
Yeah. Those of us who've been around the block a little while can remember talking about windows opening and windows closing. And of course, we haven't really seen a closed window for nearly 10 years. It's been a quite extraordinary rise in biotech public markets. And if you look over the long term, even with companies, the median companies being over 50% off their peak prices in the recent 6 months, we're still outperforming S&P and all other indices over an extended period of time. So I think we've got to take a little bit more of a longer picture. Windows do close. It's not obvious it's completely shut, I would have to say, but predicting the future is clearly hard, and I'm not going to go to that place talking about when windows may open up. But I certainly think the public opportunities have diminished significantly. I have to say, for the most part, we look to sell our companies to pharma, and the pharma appetite is completely undiminished. Huge, well over hundreds of billions of dollars of products going off patent cliff, productivity not changing greatly, and they've got about arguably $1 trillion of cash and debt. So I think we will see M&A starting to increase to offset what we're seeing in public markets. I think it will. The public market impact obviously has a number of impacts on our industry. The number of clinical studies is increasing dramatically, and obviously many of those will be relatively new public companies who may well struggle to find cash, and assuming these conditions do remain as they are. And I think it's beholden upon all of us entrepreneurs and investors to hope for the best but prepare for the worst as well. And Nanna really touched on some of those points. So I think there may well be a funding gap. I think it may well be larger in Europe, because there's quite a few F1 foreign filings on the US, and actually if you look at what happens when the tide goes out, European companies tend to be hit more severely than US companies. So I think there's a European aspect to this. I think the good news is there's a lot of capital being raised privately in the US. There's about $30 billion of new capital raised last year, nearly 3 times what was raised in 2019. So there's actually quite a lot of cash on the sidelines. And I think, therefore, the opportunity to keep building companies and working with good syndicates who have really have seen this before and are not betting that this momentum play will keep going and kind of save their bacon. And I think, focusing on the fundamentals and, real inflection points in the business and making sure there's cash available to get them there. But, I think it may well be challenging times. I think CEOs really do need to regroup now. And I think, betting on IPOs, if they have been doing that, they should certainly not do that. And I think really getting their cost base in good shape and, preparing potentially for, I was going to use that horrible expression, nuclear winter, but that's clearly not appropriate in the current environment, given what's happening to the poor people in Ukraine. But nonetheless, I think our industry could be a very difficult time, and I think CEOs need to be prepared. And I think really work hard with their VCs, hopefully, who it sounds like most of the individuals here, not only GPs and LPs, thanks to people like EIF and others and Novo, that there's quite a lot of cash on the sidelines. And I think I'd spend a lot of time, looking at your budgets going forward and working with groups like those on the panel today.
Thank you, team. That leads me to the question to Sandra. I mean, we've seen a record number not only on your investment, as you just mentioned, but more in general on capital deployed in life science. That's true for both sides of the ocean, in the EU and Asia. Is Europe sort of catching up, at least on life science? Where do we stand, or what needs to be done eventually to address any gap, Sandra?
Yes, definitely. Thanks, Diana. Europe is catching up, but slowly, because the gap with the US is still remains quite strong, and also compared to the amount of money which is flowing to the on the tech side. So there are still a number of gaps that needs to be addressed. So what we observe at EIF is that first of all, the ecosystem remains very small. So it's very difficult for new teams and emerging teams to raise funds in general. So this is one of our key focus to help there. So when we see, of course, that all the necessary ingredients for success are there, we're taking the risk and we support. We also see a need for more sizable funds in Europe. So we certainly have seen very successful fundraising lately. Can mention LSP that has reached with their 7th fund the €1 billion mark. So quite impressive. This is a milestone for the European venture capital ecosystem, and we are seeing other funds that are getting closer to the €500 million mark. But let's say it's still very complicated in terms of a lot of volatility on the fundraising side. So there as well, I think there is a need for public support to help the funds reach this size and to be able then, let's say, to really capture all the upside and harvest on the risks that have been taken at the beginning, and not leave the upside only for foreign investors. We're seeing that a lot of interest from US and also Asian investors in late stage rounds in Europe. We want fund managers in Europe also to be better financially equipped in order to be able to scale European champions looking forward. Then we're seeing also some market segments which are more, let's say, neglected than others. Technology transfer is one of, obviously, because of the inherent high risks of the underlying investments there. So typically, this is scaring a little bit private investors. So here we are having, let's say, a cornerstone investor role in this type of funds, and as well on the growth stage. So on the other end of the funding spectrum, where here there is a lack of capital available on the market. And another point is the fact that the European market is still extremely fragmented. So we see a lot of concentration in what we call the core markets, so in the Netherlands, in the UK, in France, but everything, on the peripheral Europe, on the south, on the east, on even in Germany, which has been a historic that is very, let's say, strong on the tech side, has been neglected on the life science side, despite a very strong innovation potential, but also to a certain extent in the Nordics. We are also, let's say, putting a key focus to help managers in these areas. And to do that, we have several pots of money, so mandates that we can mobilize. So we have the mandate from the European Commission that allows us to take a little bit more risks. So it is especially suited for first and emerging teams in Europe. We have a mandate from the European Investment Bank, which is a little bit more commercially oriented. But these are resources that we use across sectors, so to address many gaps in Europe. And then what we've done is that we have developed specific initiatives that help us to tackle a little bit more the specificities of the life science market. So we have, for example, launched the Venture Capital Center of Excellence program together with the EIT Health, which is a 200 million, up to 200 million fund of fund with a cornerstone investment from the European Commission, with the aim to and the rest coming from corporates, so especially pharmaceutical companies or health insurance companies, with the objective to bring closer those strategic players and VC funds and ultimately the startups, and especially in those markets that are less visible for the corporates. So what I was talking about, what we call the rising markets, the peripheral Europe. So it is on one hand helping managers in those areas to build up the network within strategic players. And on the other hand, the corporates are getting a strategic advantage by having by being able to see what's going on those markets that are typically less accessible for them, and where they're let's say the blue chip players or the most established players do not necessarily actively invest. So that's one initiative. Another initiative that we've launched, it's called the Asset Management Umbrella Fund, is aiming to bring new LPs to the asset class, to the life science asset class, VC asset class. So the idea is to fundraise amongst investors that typically do not look at all at VCs, and to bring to catch their attention and give them access to the best performing fund managers in Europe. And actually Abingworth, we have team on the call, is part of this portfolio. We have also Forbion, part of this portfolio. And so the idea here is really to channel more resources to this asset class. Another initiative that we have recently launched is the Scale Up Europe, so the Tech Champion initiative, that is aiming, is a 3.5 billion euro initiative that is combining resources from the EIB group and resources from member states, specifically designed to help late stage funds. So the creation of 10 to 20 very large late stage funds. So being able on our end to invest ticket of between 100 and 300 million euros to help the creation of a billion euro and plus funds. And we expect that let's say a third of it a third of these funds to be life sciences funds. So that's basically what we have at the moment. We are also working very hard in order to raise a dedicated mandate for life sciences that would help us also capture the specificities of the life science ecosystem, because having resources that are used across stages sometimes doesn't allow us, for example, to on the crossover funds, this is something very specific to the life science market, where we sometimes, because of lack of capital, we've seen premature IPOs on the market taking place. Our mandates typically do not allow us to invest in listed companies, or just a limited portion. So we are trying to raise, and especially we are in a dialogue with the European Commission in order to raise a large mandate dedicated to life sciences.
Wow. Sandra, thanks for the outline. That gives the impression that definitely liquidity in the future will sort of increase even further. And is the key question is, are we fearing competition, or are we still in a position where the market needs more of it? And that probably depends on the segment and the stage, as you mentioned. But I mean, let's talk now about which are the most interesting technologies, the most interesting areas to invest that money and then the liquidity, also considering the competition we're fearing from other source of funds. Emmanuelle, do you want to take the question?
Sure. Obviously, I don't have a crystal ball. However, if we consider just the last 2 years, I think we have seen some great success at the clinical stage or even commercial stage in terms of very innovative technologies, gene therapy, cell therapy, PROTEC, etc. And with these first validations, at least from my point of view, we will see the next generation of platforms emerging. Especially last year, we have seen a number of very large Series A for new platforms addressing the challenges of the first generation platforms. Let's zoom in, for example, gene therapy. We all know that one of the challenges is immunogenicity and the fact that we cannot have any repeated dosing. Last year, there was a company, I think actually from Abingworth, called Engarium, raising 55 million euros Series A, and clearly addressing these challenges. I can also think about new product platform like Enfista, like Avila, both addressing this limitation about D3 ligases, for example, or extracellular proteins that were not addressable with the first generation product platforms. We have seen also many people having a strong interest, including pharma partners, in a new generation of cell therapies. For example, in vivo reprogramming. Sanofi just last year acquired a very early stage company called Tidal for indeed engineering CAR T cells in vivo and not injecting CAR T cells produced ex vivo. We have seen platforms like Woogene developing indeed a new type of NK cells for having a better tumor killing functionality and in vivo persistences. So long story short, I think we will see more and more of these platforms developing products with a greater potential and efficacy in the future. First generation have paved the way, but there is so much to achieve for really getting drugs that are optimal. I see maybe less traction recently for single asset stories. I know when I started in this industry 15 years ago, the virtual model was very much fashionable. We see less traction for this type of things now. Not to say that it will not come back, especially with the NASDAQ closing down, but just now I think it's less attractive for most VCs.
Interesting, Emmanuelle, thanks. And team, we discussed and mentioned, we discussed a bit already about the liquidity, the status of the liquidity of the asset class, which is quite interesting, or at least in records number compared to the past. Now we are not sure we are there yet. But what are the drivers? I mean, what are the drivers currently on investment in life science? Are these very much related to the exit capabilities or the exit possibilities, or is there competition? Is there on deals given the liquidity? How do you think? What do you think are the main drivers for investment?
Yeah, great question. It's a little bit of tale of two cities that's probably going to get even more differentiated, and by that I'm referring to the US and Europe. And we're obviously investors, as others are on the panel, in both geographies. And I think, particularly as the markets, retread themselves somewhat, public markets in the US, I think there's a risk that may get worse. In the US, a lot more competition, a lot more private capital, a lot more the breadth of the capital, crossover funds, etc., which there's less of in Europe, of course. So Europe more collegial, I think. Challenges getting talent, of course, but I think staying on the fundraising scheme, something like a quarter of venture dollars comes from institutions like the EIF, BPI. There's a new TB program in France. The UK have got British Patient Capital. A lot of them are focusing on the place that I think is right. My own view is actually there's quite a lot of capital for good startup innovation. I'm not sure that's the challenge in Europe today. It was certainly the case 15 to 20 years ago, but it really is this scale-up capital. How do you build truly European product champions and get access to hundreds of millions of dollars you need without having to go to NASDAQ? And clearly there are ways to be public in both markets. But I think that has always been the challenge in Europe. I think it could, particularly if the NASDAQ falls back and makes it even more difficult for European filings. I think that's really the space that, there's a collective challenge. I think coming out of COVID, the governments have appreciated the opportunity that life sciences can provide, high differentiation, high skill set, high margin businesses. And there's a kind of a degree of biotech sovereignty that is coming into it. But I think all of those things are good things. Whether we'll ever get public markets in Europe really responsive to biotechnology remains to be seen. I think part of it is on us to show them they can make money and really generate some impressive biotechnology companies. So I think that certainly remains an issue, I think. And so as we, to answer your question specifically, we do tend to think about exits to pharmaceutical companies, and we only see their appetite continuing. We will go public if it makes sense to do that, but usually on NASDAQ. We will sometimes go public in Europe, but really only if the cash we can raise can get us significantly to an inflection point. I think the good news, again, is the science in Europe is fantastic. A lot of the things that we touched on earlier around gene therapy, cell therapy, the ability to go from science, academic science, into the clinic pretty quickly really does mean that you can move quite fast. Getting access to good talent remains a challenge. But I have to say, in conclusion, if you like, we're seeing increasingly an arbitrage in terms of valuations, public and private, in Europe versus the US. So I do think we're certainly looking to deploy more capital in Europe on a relative basis going forward. And I think we're starting to see a lot more US and other groups, including Chinese and other groups coming in as well. So I think, challenging times, but in a way it's kind of an evolutionary process. And I think good companies will continue to prevail. How we, truly build these next generation of European champions, I think remains a challenge to do it with private equity.
Thank you, team. And we'll come to the M&A activity and the exit and the outcome for the year in a minute. Let me just ask Sandra what her opinion is on the topic through the various funds she as an investor is exposed to. Do you see any different way of deploying funds at the moment, new drivers than it used to be in the past? Do you see any difference in the deployment of capital? Are we going earlier? Are we going more diversified? Are we going more for opposite later and close to IPO rounds? Have you seen any of that in the various funds?
Well, definitely. What we're seeing on the market is the emergence of more specialist teams. So, for example, we are seeing a lot of digital health focused funds that are being raised at the moment, especially in Germany or in the DACH region. I think it has also to do with the digital healthcare act that the German government signed in the late 90s. Sorry, in 2019. I think definitely also they've been let's say a willingness for managers to raise larger funds in order to be able to support for a longer time and to scale their portfolio companies. So there again, because of the volatility we are seeing in the fundraising environment, players such as EIF or BPI and other NPIs in Europe are pretty critical to help them reach this target size. And okay, as EIF, we are a counter-cyclical investor, so we're here to help even more in times of crisis. So hence also the €1 billion investments figures that I gave earlier for last year. What we are seeing also, which is an interesting trend, is fund managers that are willing. So I always say that life science is an asset class where we have that can deliver a unique combination of very high societal impact and proven strong financial returns. So a high societal impact because VCs are critical to help new innovation, to help innovation reach the market. And we've seen with the crisis how critical it is to continue innovating in that space. So we've seen also some interest for new type of investors for life sciences funds in general, from tech companies, for example, big tech companies or some pension funds, but they do not necessarily always materialize into commitments. I think there is a need to create more awareness about that. There is also a perception that the crisis is over, and therefore, maybe life science is a little bit losing momentum on or let's say appeal at the moment. But definitely there are so many unmet medical needs that needs to be tackled. Future pandemic that we absolutely need to be better prepared to face. We've seen our healthcare system that have been completely overwhelmed by the current crisis. So it is very critical, and this is what we're trying to do to raise awareness about the critical role that VCs are playing. One thing that we are seeing on the market at the moment is also managers, life science fund managers, that are asking themselves how can they measure the impact, the societal impact that actually they are creating through their investment activities. And Forbion, for example, is really a pioneer in this, and I know they're producing a very nice report. So, some players are measuring it in terms of healthcare cost reduction or number of patients treated. I think going forward, this could be also a trigger for investments in life sciences funds. Then on the company themselves, the way we are seeing the funds being deployed, I think managers are willing also to deploy very balanced portfolio to generate early liquidity for the investors, to help always with the vision to help also on the fundraising and being able to have large enough funds in order not to depend on the market too much on the public market. And we've seen how volatile they are. So that's also very good that they equip themselves with the right amount of capital needed to execute and optimally their investment strategy.
Thank you, Sandra. And going back to the other main driver for exits for us being the M&A activity, Nanna, how do you see the markets? How do you see the exits other than IPO we just talked about more on the M&A side?
Yeah, I mean, I guess a lot of people have commented that there's maybe been a slightly lower activity on the M&A side for the last couple of years, but I mean, it's not really surprising given the very easy access to both public and private capital, I guess, for private companies. And I would say that when in our dialogue with pharma BD teams, they have a very well-defined shopping list of both technologies, targets, and companies that they're very interested in engaging with. But they also maintain, a pretty firm price discipline, because obviously they need to have their commercial team sign off on the potential value of any transaction. So I think now that we are seeing valuations resetting right now, mainly in the public market, but it will filter through to private markets as well. I would certainly expect that M&A and strategic collaborations with pharma becomes more attractive, both to acquirers as well as to companies. I'm not sure whether we'll see a huge number of sort of very large transformative strategic M&A, but certainly I think both large biotech and large pharma is very interested and very engaged in the smaller kind of bolt-on transactions where we're talking about adding 1 or 2 pipeline products in areas of interest. So I think we'd expect to see significantly more of this.
Thank you, Nanna. And then Emmanuelle, we talked a lot about liquidity, actual liquidity and market conditions, but there is still impression, at least for some segments of in the life science, that there's still not appetite for early stage deals, but quite different in others, right? On therapeutics and on some of the more advanced therapies segments, it's kind of the opposite. We're going very, very early, sometimes even into the technology transfers market segment. How do you see the differences, and how do you see competition on those specific on this specific segment of deals?
Yeah, I think I will comment for the therapeutic part, because it's what we do at Novo Seeds, and we don't really focus on medtech. So I will let you comment on this part. I think the landscape in Europe has changed. Again, 10 years back, when you raised a 20 million euro Series A, it was a big achievement. It was a large one. Now the new 20, it's 50 million euros. We have seen a number of these transactions, even for discovery stage companies. Actually, it fits very well with the model we have at Novo Seeds, because we incubate companies with entrepreneur in residence, stealth mode, generating killer data experiments. And then once we have the right data package, we go out and we raise this large Series A. And to Tim's point, actually, we see US investors even having traction for early stage companies like this one. And now with the right management team and the right portfolio of assets or the right platform, it's not that difficult to raise the large Series A you need. Again, depends on the quality of your data. But the interesting thing is that we have seen also European investors who were historically focused on more clinical stage assets or even late stage preclinical assets moving towards earlier stage investments. And this is actually the consequence from the competition that has increased, because now getting access to the best deals or the best assets when they are preclinical stage or clinical stage, it's more or less impossible now. So you have, or you're forced to invest early. And that's an opportunity for us being company builders, because then it allows us to build the companies the right way, to attract more talents, more international talents, because it's really the essence of the success. And then you're financed enough to really achieve significant proof of concept, even potentially phase 1 data within your Series A. So long story short, in therapeutics, for the best projects, I don't think money is the issue. It's more the access to talented management, actually.
Thank you, Emmanuelle. Well, a quick comment is that on medical device diagnostic, bit on digital health as well, we don't see a lot of competition still on early stage deals. I have to say, quite a safe place as opposed to what you just said. It's probably coming, and it was coming with the IPO window being open also to early stage medtech and diagnostic, and particularly in diagnostic, there were several well valued companies going out and IPOing in their early days. So that was that's still quite a change. But just before we run out of time, as the last question is very precious for the audience, at least the entrepreneurs that are in the audience, I would go for a quick round with 1 minute each with your tips for entrepreneurs who want to raise funds. Give your 2 cents, your piece of advice to them and what they should be doing, and specific to current environment and liquidity, as we just discussed. Tim, go first.
Yeah, look, I think persistence pays. So if you've got a good idea, you should be able to get raise capital. I think in the current environment, people can get wedded to pre-money valuations based on what they've seen over the last 2 to 3 years. I really urge a little bit of caution. I would say that wouldn't as a venture capitalist, but I think it's the reality as well. Just focus on building your business, raise capital. Don't push for crazy pre-money valuations. Get the capital on board, build the business, and really focus hard on that. Get enough capital to get to key inflection points. Having been an entrepreneur on the other side of the fence for many years, I know the challenges, but I'd certainly, a level of realism in the current environment, I think, is very important.
Thank you, Tim. Emmanuelle, go next.
Yeah, I will be quick. I think 2 tips on my side. The first one being, again, there is less appetite currently, at least for single asset projects. So if you can identify quite early on a portfolio of assets that you could in-license, it would be helpful, I guess, for your fundraising. And the other one is this trend that we see more and more actually in-house venture creation models rather than the traditional roadshow and slide deck presentation to hundreds of VCs. So actually, as an entrepreneur, if you have the opportunity to pair up even before company creation with one of the big VCs in Europe, it will help you creating what you want.
Thank you, Emmanuelle. Nanna.
Yeah, I mean, I would say, luck favors the well prepared. Be well prepared, and because you only get to make a first impression once. I'd say I still think, a lot of European entrepreneurs let themselves down a little bit on the communication side. And this is where a lot of the US teams really excel and really are incredibly skilled communicators, really good at telling a compelling story. So, check out what your competition is doing. Most of their companies have very, very nice decks available on their websites, on banking conferences, etc. You can hear the webcasts and try and make sure that you come in and are ready to keep your listener entertained and spellbound and intrigued by your story for a sharp 45-minute pitch. And then, you'll pave the way for having many more hours-long discussions thereafter.
Sandra, you're more on the LP side, but what do you hear from the funds you're invested? What should be done better?
I can give the perspective of EIF. So don't contact EIF. We don't invest directly into the companies. We have a list on our website of all the funds that we have funded. And when we invest in a fund, we make sure that through our very thorough due diligence the process, that the fund managers are able to both, help you financially, but also with all the supports and connections that are needed for your business to grow. So check out the list of funds that we have supported on our website.
Thank you. That's great for a fund. That's a great statement for us as a VC fund. And I think with this, we're running out of time. So I'm going to thank you everyone for attending the panel, the panelists for being so insightful, and Sachs for organizing this panel again. Thank you. Bye. Bye, everyone.
Thank you very much.